All right, we are live for the midday Mike and Mario show. Excited to be back. Looking forward to touching on prior events of this week as well as looking ahead into the future. But before we do that, Mario, how are you doing, my friend?
I'm all right. Looking at the markets and everything that's happening in the world, there's so much. But
Yeah,
maybe we can start with the U.S. economy. We had the GDP data that
yeah,
came out. I think it was yesterday, and I think they came out at 5.9%. I'm
yeah.
hearing that people are saying that Biden and the administration are saying it's the greatest economy ever. But uh, we need to look underneath the surface,
Mhm.
and this is not just with Biden, but also happened with the previous administration. So I did a little flow chart or something about GDP. If we
Yeah,
stripped government spending from
yeah.
GDP, how the economy and the debt really is. So as you can see there, I took the screenshot yesterday
Mhm.
at 14:17 GMT.
Yeah.
National debt probably a lot higher right now. It's probably approaching 30 trillion. So as you can see, the equation there, GDP equals consumption, and that's private, corporate, any kind of consumption that is not government consumption,
Yeah.
plus investment, same kind of thing. Any investment that's not government, and then G is government expenditures, and NX is net exports, which usually is negative because the U.S. has been running a trade deficit for decades.
Yeah.
So that's not improving. But if you think governments create wealth, then you shouldn't. You probably are not watching this program, and if you do, hopefully, we'll be able to change your mind because government they tax the private sector in order to spend. A lot of times, they borrow from the private sector. That's why we got all that debt. They borrow
Mhm.
from us and from future generations to spend now. So if you look underneath national debt, you got U.S. federal spending, and that's
Mhm.
just federal spending. So it's 6.893 trillion. So what I've done here is I've subtracted that from total GDP, which is, as you can see on the bottom right hand side,
Mhm.
23.4 trillion. You subtract that, and you get the private economy GDP at 16.534 trillion, or
Mm.
as I named it, PGDP, private sector GDP.
Yeah.
And if you divide the national debt into that 16.5 trillion, you
Mhm.
get almost 181% debt to GDP.
Mm.
So yes, that's the flip side of the great economy.
Yeah.
Uh, it's heavily dependent on government spending, borrowing very cheaply from the markets. Thanks to the Federal Reserve
Mhm.
for printing reserves out of thin air at no cost and keeping rates uh, basically manipulated at zero, at least the short term rates. Right now, they're having a tough time with the longer term rates. And yeah, so I don't think the economy is as great as it's portrayed.
Yeah.
And
Here's a little article that I just popped up about Biden. And so apparently, so this is a little side note. Apparently, he's heading to Pittsburgh to speak, and it looks like a bridge, something about a bridge collapsed. I'm not sure if it has anything to do with the route he's taking, but they're talking about a bridge collapse, and this is not good for his whole infrastructure bill, just because it shows how bad the infrastructure of our country really is. So we'll see if he tries to use that bridge collapse as a way to they need to spend more, and this is how you're going to
yeah,
improve the economy.
I saw that headline about a bridge collapsing in Pittsburgh while he's going to visit Pittsburgh.
Yeah.
Seems very convenient.
Exactly. Oh man. But anyway, so hope everyone's doing well. Welcome to the Mike and Mario show for those who just might be tuning in. Let's keep it moving, right? So let's talk a little bit about the hyper financialization of things. And so I want to continue to just, I guess, emphasize how artificial and synthetic everything is. And so here's a little tweet that I grabbed from earlier in the week, and it just talks about how the U.S. is the most hyper financialized economy in the world, and any hit to the financial assets will instantly smother the economy. And this all piggybacks on the Federal Reserve's jawboning on what they're going to do and what's needed in order to combat inflation. of which we all know what's at risk. And so, given the fact the economy is artificial in nature, based upon some of the things you just mentioned, Mario, they know they can't do it, but they're still going to talk about doing it. So the question is, what are they waiting on? What are they stalling for? What are they trying to actually accomplish in this whole this whole monetary tightening aspect of things? So we're going to find out. But the private sector runs the world for the most part, and over the last, as this chart shows here, since '95 onwards, the private sector has benefited the most from all this easy money at the expense of Main Street, which happens to be your average middle class worker, investor, and whatever. So just some extremely disturbing numbers, I would say.
Yeah, is that number, because it says there chart and Wall Street to chart. It says Wall Street winning, Main Street losing. It says the U.S. private sector financial as percentage of GDP. And on the top right hand side, it says 6.3 times.
Times, right?
So is that actually 630%, not 6.3%? So it's a huge number if it's 630.
Yeah,
And I know J.P. Morgan has over its balance sheet has over $1 trillion. So yeah, it's amazing. And one of the reasons
wow.
that's been possible,
Mhm.
if you look at when that chart really started going up, it, it broke out in the early 90s there,
Mhm.
mid 90s, but it
Yeah,
actually started going up in the early 80s. And I think one of the reasons they've been able to become hyper financialized is because interest rates have been in a secular bear market.
yeah,
That means the bond market has been in a secular bull market, of course. But I'm not sure how long this will last, and
right.
I think this is what the Fed's trying to do to keep investors from selling long-term bonds, because it would really hurt this hyper financialization. But you've noticed that, like you said, they just keep threatening.
Mhm.
So my question to you, Mike, is: uh, does it worry you that something out of the blue could happen from now until March when the Fed really needs to do something?
Right, right, and that's the part where before we went live, I was talking about how I kind of feel like the world's in limbo, waiting for something, and so there's so many things happening. Of course, Ukraine, Russia's continuously being pumped out there and of course the narratives have changed significantly from the west to the east, and so it's like a matter of like, okay, what's next? So, and I mentioned earlier after watching Federer's the FOMC Q&A session, where basically Jerome Powell looked as nervous as I've ever seen him because he was scratching his head and the questions that were coming at him were the typical questions, but he couldn't give a valid response to anything. He was kind of just pushing everything out, not being very specific on anything. I'm like, wow, he's panicking. And so literally they're buying time, they're stalling, they're waiting on something. They need something. So it's just a matter of what. And that's the part where I just don't like sitting around in limbo, like, man, so we're waiting too, in a sense. But
Yeah.
I was telling everybody how because we know they're stalling or assume they're stalling, it's a great time to take advantage of the continuation of the manipulation. So people are calling and saying that, if they're trading, if they're traders and they're out there taking advantage of all the options and all that technical stuff out there, there's ways to benefit. And then I'm telling people on the simple side of things, metals right now, still the cheapest they're ever going to be.
Yeah.
Take advantage of that as much as you can. Like I can't emphasize that enough because when stuff breaks, it's going to break and it won't be pretty.
Yes, it's I've been stacking since 2002, and it is a frustrating market,
Mm-hmm.
and I think it's on purpose.
Yeah.
And it goes back to the if you look back to 1974, just before gold was made legal again in the U.S.
Mm-hmm.
On January, I think it was January 1st, 1975. The U.S. Government was in contact with the British government about the bullion market in London, and how it would impact, seeing that gold would be legal again, how it would impact the market.
Yeah.
And they were concerned. But you look at the Wikipedia leak of that communications. Uh, I think they noted that the fact that they were going to start COMEX gold contract,
Mm-hmm.
because the gold contract only started trading on 31st of December 1974. And why the 31st? Well, because the futures trade, they settled the next day. So they had to make sure they were already trading the future the day it was legal.
Mhm.
And in that wire communications and in the leak from Wikipedia, it says that a speculative market like a futures and a COMEX market should help keep uh, American investors away from physical gold, and it
Mhm.
should also help keep it volatile, a volatile market, so people get discouraged
Yeah.
from stacking gold. And gold at the time, of course, was trading below $200.
Mhm.
So, that's the whole thing, and I can understand why people get frustrated, especially people who have just gotten into gold in
Right.
the last year or two.
Right, and that's so all those avenues and products and the hyper financialization of our economy was designed to steer people's attention towards the creation of those products to keep you away from something real tangible that you can feel, i.e., gold and silver primarily. But then again, the focus has become on the stock market. And so that's been the primary focus of everything. So that illusionary wealth effect of like your portfolio being the pinnacle of everything you focus on is what they have used as the barometer for wealth in this country. And so that's the biggest thing that's in jeopardy right now because once again, this past week, I think Monday dropped 1,000, recovered. Tuesday dropped, recovered. I don't know. Wednesday dropped,
Yeah,
recovered. So,
yeah,
and my thing is, okay, so some people are saying out here, commentators are saying they're going to crash the stock market. They're going to sacrifice the stock market. With at the end of the day, with all this talk about hikes down the line, and so my thought was maybe they are literally going to allow the stock market remain volatile with those different types of dips on different days because they have a backup, the Plunge protection team. And so if that entity was created during the Great Depression time as a result of everything that took place, why not take advantage of that now? Allow, if there's, the slush funds to prop it up so you can drop 1,000, but then just come in and buy it up. That can alleviate some of the concerns the Fed has on that while they can concentrate on all the other stuff, which I'd assume has to be the derivatives and all that other complicated stuff. So I think they're not sacrificing the stock market, but they're going to let the treasury or something like that deal with that. So that's just my little
y-
suspicion. What do you think about
yeah.
that?
Well, the plunge protection team, yeah, was basically its seeds were planted in 1934
Mm-hmm.
with the Gold Act of 1934 when they created the Exchange Stabilization Fund with a profit that they made from stealing Americans' gold and then
Yeah.
revaluing it from $20.67 to 35. And then later on in 1987, when you had the crash, they decided to actually form this group. It's the White House, the Treasury, the regulators like the SEC, CFTC,
Mm.
and the Federal Reserve. So those four entities, and that became the plunge protection team. And I think they come out. They don't come out regularly, but I think they came out earlier this week when things were really. I think the Dow was. I think it was Monday or Tuesday. The Dow was like down 1,000. The Nasdaq was down about 600,
Yeah.
and then all of a sudden, someone sold loads of these puts, VIX puts, uh, and the market just magically went up and finished up on the day or unchanged.
Yeah.
I think that could have been the plunge protection team. And the thing with the plunge protection team is that it's a government entity, but
Mm-hmm.
they'll put the trades through people like J.P. Morgan. So when the dealers at J.P. Morgan see the plunge protection team line flashing, or the guy that deals for them doing stuff, they know, oh, they've come on, and they just like jump jump on the bandwagon. So
Yeah.
it's really it's a real corrupt game,
Well,
unfortunately.
yeah.
So, but I wanted to say as well, Mike, that the most important market is not the stock market;
Mm-hmm.
it's the price of money market, which is the bond
Mm.
market.
Yeah.
And I think this is, if the Fed's able to maintain a perception that they're going to be able to keep rates low for a long time, or the managing inflation expectations. Um, yeah, then they'll be able to keep this stock market souped up. That's why we need to keep an eye on bond yields.
And speaking of which, it was brought to my attention. Let me see here. It was brought to my attention listening to what's her name? Naomi, no, no, what's the former Fed insider? The damn, I can't think of her name.
Oh yeah,
Booth, DeMartino Booth.
Martin Booth. Yeah,
She mentioned in one of her interviews that as of right now, still, Jerome Powell hasn't yet to be confirmed as the Fed chairman, continuing as the Fed chairman up until like February 5th. And so I wonder how much of his response of not doing anything kind of played into that as well, because if he had come out and actually done some hike of some kind, that would have triggered the markets and could have hindered his job. And so I wonder how they're
yeah,
working that.
and I think probably he's held back from doing that because I think that if they're really looking to fight inflation, they should have started raising rates last year.
Yeah.
But there was an article this week. I think it came out yesterday. The second guy in charge of Goldman Sachs, he's titled as president. He was at a meeting of pension fund investors in New Jersey, and he said that the Fed had become too political.
Yeah.
So yeah,
So I mean, but think about this. Rewind the clock. Maybe was it 3 years or 4 years ago? About 3 years ago, give or take. I remember the former administration talking about Jerome Powell's playing politics with because and I saw somebody also comment that if Trump was still in office, given the landscape we're in now, he would have been calling for negative rates. He wouldn't have been talking. He wouldn't have been screaming about tightening right now. He'd have been like, "We need looser price. Keep it the same, lower. We need more. We need more." So it's like, isn't it interesting how, regardless of the party, the objective is still the same? Continue to ease. Like easing is the only way out. Not only way out, but it's the end game, and it's the only option you have. And so it's just interesting how I thought I would share that,
yeah.
because no
A
matter
lot of
who's in office, it's the same policy ultimately.
a lot of people don't like hearing it, but all statists love inflation
Yeah.
because it means they can spend more money and buy more votes. And unfortunately, yeah, that's the guy there.
Yeah.
Unfortunately, uh, the vast majority of people think that we need the government to keep the economy going. They don't realize that it's individuals, private individuals, that make the economy grow. The only thing government does is basically destroy the economy.
Mm-hmm.
uh,
Yeah.
that and the only purpose of government should be minimal, to administer the rule of law, to make sure individuals, properties, person, and yeah, are not violated.
Right.
But that's gone out the window a very long time ago,
Right.
unfortunately.
Remember the time when savings actually was preached, and it was encouraged for people to save, and you can actually save and earn something on your savings. And now it's just cash back and all that other stuff that they're trying to sell. So
Or you now it's speculating, buying crypto or buying the Nasdaq. And you never, yeah, you don't hear the term savings anymore. You
yeah.
don't hear about compound interest, which
Mm,
was a great way to accumulate more savings and wealth. And
right.
you couldn't have compound interest right now because real interests are negative. I
Right.
mean, you've got the CPI at 7.2%, and you've got the 2-year note yield. It has gone up, but it's just over 1%. So you put your money in treasuries for 2 years, and you lose about 6% of your capital
Yeah.
in real terms.
Yeah, these are the new times that we're in, heading towards, I guess, is it still doom and gloom to say that we're in the current, I guess, financial end times, monetary, Ponzi scheme end times, or is that too far fetched? Because that's kind of what I feel like. I like, literally,
Well,
like I mentioned before, I'm waiting, I'm sitting by waiting on something while trying to take advantage of the opportunities that present themselves. But man,
for you and I, it's quite obvious that we are, and I've thought of the same thing back in '08,
Mhm.
and they've been able to kick the can. But for a lot of younger people, they weren't even around. Well, they were around, but they were too young to understand.
Mhm.
what you were saying about savings and putting your money in the bank to earn some interest. Yeah, they think that the current market structure of zero rates, of the stock market at all-time highs,
Mhm.
and the Fed always bailing people out is normal. But
Yeah. It's far, 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 far from normal. Okay, so let's keep it moving. For those that are tuned in, definitely throw out some thoughts or some questions, and we can definitely jump on those. So let's jump on a little bit of the next area that's I think worth definitely mentioning. Let me actually pull up my little banner here so we can try to get some or getting organized a little bit. But the supply chain issues continue, and so Michael Snyder did a great job of basically highlighting two things that concerned him. And as I look for the article to pull it up here, we can touch on that a little bit. Let me find the article. Where'd it go?
yeah, I can start if you want while we look
Yeah,
for
go
the
ahead. Let me
article.
grab this article. Here we go.
Well, he touched upon the fertilizer problem,
Yeah.
that not just in the emerging market countries, that they're having a tough time with the cost for fertilizers, and
Yeah.
that he was saying that the in Africa they could lose the equivalent of food for 100 million people because
Hmm.
of how expensive fertilizer is. Like
Yeah.
in North Korea, they're asking people to use their
Human waste.
human waste
Yeah.
as fertilizer. And he said the same thing is happening in the US. A lot of uh, I think in the state of Kansas,
Yeah.
uh, a lot of the fertilizer prices have gone up 50%. Some have quadrupled, and that's going to affect food prices. And the
Yeah.
other important thing he noted is the chip shortage, semiconductor.
Yeah.
And I think that's really important for the economy in this day and age, because semiconductors are used for everything that's electronic, and we
Yeah.
live in a totally electronic world these days.
Yeah.
And how Taiwan is so important. They produce 63% of all the world's semiconductor, and apparently there's still problems, according to Michael Snyder,
Yeah.
shortages of semiconductors. Maybe Brandon thinks he can fix it, but when governments try to do things, they usually have the opposite effect.
Right. And isn't it amazing how, I get the video you sent me about how the US is, manufacturing of probably about more than 50% of the semiconductors, but because of and this goes back to the hyper financialization of our
Taiwan,
of our economy,
it's
huh?
Taiwan, isn't it? That the
The other
semi,
half, yeah.
yeah,
So as a result of the consumption side of things having been the primary driver for growth over the last 50 years or so, the idea that these semiconductors are so pivotal to society because there's a release of a new car every year. There's a release of all these gadgets every 6 months from Apple and whatever. And it's
mm,
like it's always it's too much. Like, the fact that semiconductor shortage is a crisis in the making lets us know that we've been living too far ahead of ourselves with the overconsumption of everything, to where
yeah,
if you pull some of this back, it threatens society because the labor market depends upon, like, all the debt that's included in all this. So it's like it's unsustainable as of now
yeah,
because this Ponzi scheme, man. They reached
and
into
yeah,
the future and brought all that stuff back, and they've oversaturated the world with junk, and now
yeah.
it's coming home to roost.
Well, maybe I'll give an analogy. What I think has happened, they basically told Americans and even people here in the UK, because our economy is even worse. I would say we're 80% services. So
Mhm.
they said, "Oh, have your credit card, spend on your credit card. It's really cheap, uh, and don't care about infrastructure or building businesses." And the other part of it is that with all the cheap credit, what Wall Street has proposed, through private equity financing, is for big American corporations basically to go abroad and outsource everything, make it even cheaper. So you've hollowed out the manufacturing, the economy that makes things in the US and in the UK, and you've
Mhm.
kept telling people just keep spending, put it on the credit card. And at the same time, this is made the companies like Apple and others that
Right.
have outsourced. They've made fortunes from this,
Right.
but at the same time, they've destroyed the goose that lays the golden egg, which
Yeah.
is the public, the middle class.
Right.
And I think this is what we're witnessing now. How it's going to pan out, I don't know, but it's going to be uh, apocalyptic and epic.
Mm.
You
Yeah.
know, the whole I don't know
Strong
how
words there.
because, it's gonna be like a bab the yeah, it's a debt bubble completely annihilated, and
Yeah.
it's not gonna be pretty, and that's why you you can't really get rid of those, uh, precious metals. It's not just about money and gold and silver, but you also need to be, spiritually well, like you talk about, prayed up, and have friends and a close-knit community because
Yeah.
it's gonna be really you know, after 40 years of partying and, like, spending all your credit, it's gonna
Mhm.
be, uh, how can I say, really bad hangover.
Right, right. The idea of just, credit consumption, stealing from your future to live comfortable today. That's what it boils down to. And you risk not having anything truly of value that will help protect and preserve unless you're out of this system as best you can, man. It's just, yeah. Okay. So let's get to some questions, man. So feel free to throw out some questions. We'll jump on them, share our 2 cents on it. Here's something here. I love to know how the BRICS fits into today's collapsing economy. The BRICS seem to have dropped off everyone's radar. Great question. Yeah, due to all this war drums beating in that Eastern Hemisphere region, we haven't heard much about it. And suspicion is, I think we talked about this before, how we think a lot of what the West is doing in this war rattling has to do with the disruption of the One Belt, One Road initiative, which no doubt Russia and China have all agreed upon will be a part of the next world order. But it looks like the West is trying to play hardball with it, or is this all a part of their this is a part of the narrative needed as the empires change, you think? Because we always go to war. Every empire ends with war. Is this all this stuff a part of that, or what? What do you think about that? Or the
I
BRICS in
think
general?
yeah, I think the BRICS are still out there. Brazil, Russia, India, China, and South Africa.
Yeah,
And, all the, geopolitical tension nowadays is just the last vestiges, I think, of a dying empire, be it, you
yeah,
know, Western or US. And I think they're just trying to, act that they're doing something to stop it, but they can't really,
mhm,
because empires need credit and money to keep themselves going.
yeah,
The Roman Empire, by the fourth century, it was on its way out because it spent too much. All their coinage, you know, the denarius went from 95, 98% silver to zero almost.
yeah,
And it's the same thing here. You could look at the Western Empire, Anglo-American Empire, going further back. You know, you could uh, say that it's the British Empire continued.
yeah,
So I mean, I think we're on the last legs, and
mm,
we haven't heard much about the BRICS, but I think they're still important. I
yeah,
noticed that the Brazilian president was invited by Putin for a state visit, which
yeah.
he's going to make in February. So they're still
Yeah, and then here's just this headline here. China to host the 14th. So that means for the last 14 years, give or take or so, they've been concocting a plan to bring together their country's resources and world structure for something. And so no doubt they already have everything planned out. And I remember before the Brazilian, I think it was De Silva, the president, whoever he was put in jail or ousted out or whatever. Because I think they mentioned that they were talking about releasing a BRICS currency, a unified currency, or something like that. But then some things changed, and that's when I think the whole war drums really began beating. And then the Russia, narrative came into to play of Russia is the reason for everything that goes wrong on the planet. And so I think that was a part of their plans. But for 14 years, they've been trying to do something. So
yeah. I think the BRICS they're just a group of you know quite big, important nations and
mhm,
economies trying to cooperate
yeah,
and trying to find an alternative to the current system, because the current system is not going to hold.
Mhm.
The U.S. dollar is losing more and more of its. It's still going to be important, but
Mhm.
it's not going to be the only currency used.
Right.
I think, and the fact that yeah, all these, you had the '08 crisis. I think the Chinese had a lot of mortgage-backed securities. So
Mhm.
if they hadn't been bailed out, if there wasn't a '08 bailout, I think the system would have already migrated out of, the petrodollar.
Yeah.
And I think what happened in 2020 was another nail in the coffin, because there's too much uncertainty, and yeah, and disinflation that we're seeing doesn't help either.
Yeah.
You
Now we can't move on without talking about, I think, another little story that happens to just be everywhere now. So it looks like the White House wants to basically clamp down a little bit because of national security reasons, and so it's a threat to the economic stability of our countries, apparently. So uh what do you so there's an executive order coming, I think, within the next week or so, to basically deal with this national security threat with the crypto space. But this to me is like, I'm not sure how to read this, because a part of me wants to believe that, a lot of the projects are a threat to the economics order because they don't want people to get out of the system as it's crumbling. But the question would then be, what type of things will they put in play? Will it be with the wallet? We know the face scanning, all types of draconian type of things. What are your thoughts about this? Is this something to take serious, or is this just more of an attempt that they won't be able to succeed with?
Well, I can see why they want to look into the stable coins, like they say there, especially with Tether.
Hmm.
And I think they're also looking at this as a risk, not maybe a national security, but also a risk, financial risk,
Yeah.
because if the public get too heavily involved and leverage in the crypto space, and then there's a collapse,
Yeah.
it could hurt financial institutions, especially seeing that Wall Street wants to get is getting really involved now.
Mm.
And yeah, apart from that, I mean, I don't see anything wrong with some of the blockchain technology and NFTs.
Yeah.
Uh, you know, Usually when governments try to stop these things, they make it worse.
100%. So we'll see, but as of right now, there's a lot of people putting their confidence and trust in the fact that this is a disruptor of the world order. So we'll see, but at the same time, the banks are excited and more excited than ever because they're getting involved, and so they're trying to provide opportunities to custody your cryptos for you directly. And so, yeah, how does that bring down the banks? I'm not sure, but we'll keep it moving. So somebody mentioned something about asking you about green stamps, but being used as money. Does Mario or know anything about green stamps or something like that? Do you know what that is about? Let me see if I can find that question.
Was that back in
Uh,
the during the Great Depression, or green
I'm not
shoe?
sure, so I can Google it real quick. But it says Mario green stamps was money back in the day. Uh,
I know that during the Great Depression in the U.S., there some, even like towns and small cities
mhm,
issued their own currency because there was no money around.
yeah.
And so cryptocurrencies are not a new thing. Not crypto, but digital currencies seem like a novel thing. But back in the 30s,
Hmm.
there were a lot of different currencies. You could have, the Richmond, Virginia, dollar or something, and people would use them.
Yeah. So this is
So
what popped up with green stamps. So I'm not familiar with.
1896. All right.
So yeah, so assuming those things were issued and carried
Well,
value, people have
the
used.
other thing that I think could help, and governments and politicians don't like that, nor do banks, because you you can't be tracked and you can't be taxed,
Mhm.
and the banks can't take your effort through a currency or money, is to barter. I think people
Mhm.
need to try to find a way to exchange their skills with other people that they know
Yeah.
for another skill. So I think bartering, uh, like Arpad from Star Path Academy, he said that in the '90s in Romania, during the high inflation they had there, they used to do a lot of that. They didn't transact in money.
Yeah.
And it's not ideal, but it could be the way for a while before things get fixed up.
Yeah. Yeah, and we all know how things end out. So as let's get ready, I don't see more questions out here. I see a lot of back and forth amongst the community. So definitely for those tuning in, hit the thumbs up, show your support for the channel. Let's get ready, I guess, wrap things up. What are we looking forward to as we conclude this month heading into February? So we got between now and March before that hike takes place or whatever they're going to withdraw. So I'm not even sure. Are they? I haven't looked at the numbers as far as the bond or the liability purchases, to put it frankly. So what do we? So are they still
Well,
dialing back in February or what?
let's have a look here because you know from last week, if you look at the Fed's balance sheet, they're still doing the same amount of QE they've been doing for the last year.
Mm-hmm.
Uh, but this week, okay, it's come down a little bit from last week.
Put it
But
on, share it, or give me the link, or put it on your
yeah,
screen.
I'll give you the link. Yeah, hold on. But it hasn't really changed unless let me just get it here. Unless Powell is planning to stop abruptly without really tapering.
Mm,
Where's the link? Let
yeah,
me
to
put it
me
in the
that's
private chat.
so the fact that they have not
Yeah.
kept to their own word of how much they're going to be dialing back lets me know that that's more evidence of them stalling because they're
Yeah.
hoping it goes under the radar. The mainstream news is probably not allowed to talk about it.
Yeah. Here we go. I'm going to share it right now. There we go.
Okay.
So as you can see here, you go back to last year. There's ups and downs, isn't there? Ups and downs.
Mm-hmm.
And they announced around this time of the year, November, that they're going to start tapering. But look at the it's still going up the same rate.
Yeah.
Yes, it's come down here a little bit this week, but so did it this week. So yeah, I don't know what he's talking about. He's probably hoping people are not looking at this.
Right.
Or like I said, he's not really tapering, but he's gonna just
Talking. Talk the talk.
well, the other thing that he can do uh is just stop doing QE
Yeah.
and not taper. You see, so
Mm-hmm.
you go from buying 110 billion a month to buying zero. The only problem with that, if you do that abruptly, it could disrupt the bond markets because QE is all about buying bonds like
Yeah.
mortgage-backed securities and U.S. Treasuries.
Yeah, that's more trouble. So basically, expect more volatility moving forward, probably even steeper
Yeah,
declines. And so, and I want to definitely, before we dial off, I want to mention, the David Hunter, because I want you to share your thoughts on that. Let me pull that on the screen here. But David Hunter, so far, his forecasts have been relatively on point because he mentioned about, was his the recent sell with the S&P and stuff like that. But he's saying it's going to be a melt up pretty soon, then an 80% crash. Now he's saying by I think the end of this year-ish, give or take, we should see a severe crash. May not be the 80%, but something severe where it's going to get people's attention. And of course, it's going to throw off everything the Fed does, and they're going to backtrack, and then we're off to the races type of thing. But what are your thoughts on this type of projection?
yeah,
40 up, 80 down.
yeah, and I like to clarify that I'm not telling people to trade in the stock market, and I don't. The only stocks I have are mining stocks for the long term, and also commodities.
Mm-hmm.
But it's possible. Anything's possible these days because he forecasts, I think, last year that we'd see a 10% drop in the S&P.
Mm-hmm.
Now he's looking for a 40% melt up,
Yeah.
and then an 80% drop. But I could see a melt up because if the Fed backtracks
Mm-hmm.
on his hawkishness, you could see it, 40%. But then we could see the dollar and all the other currencies crash.
Mm-hmm.
And by that, I mean crash in terms of value versus real things, tangibles.
Yeah.
And that could be the blow off hyperinflationary top. And it could even continue more than 40%.
Mm-hmm.
But then it's like during Germany in the hyperinflation, or in Venezuela. I think in 2017 they had the best performing stock market,
Mm-hmm.
but their currency was trash.
Right.
So he could be right, but everything is so Confusing these days.
Upside down. As some people say, ass backwards. It's like it just don't make sense. It is what it is. But in the meantime, we know this provides an opportunity. So there's going to be more than enough opportunity for people to protect and preserve themselves as best they can. And like, no doubt, moving forward, the currency destruction will lead to complete asset price distortions of all kinds. But yet, the things you need on a day-to-day basis will never go down in price. They'll only go up because the amount of units needed to buy them. So
Yeah.
all the preparatory things, you know what to do. I mean, just it's like, sounds like we're beating the same horse upside the head, saying the same thing. But I think people, you'll never not have enough storable goods and services that you can possess in your own that you can have in your own possession when stuff hits the fan down the line, because you're gonna always wish you had more. Like whether it comes to your weight or
I also think, yeah, it's going to be a volatile ride. So I think people need to uh, take off your foot from the greed pedal, because in this environment, I think preserving what you have will be the most important thing. It won't
right.
matter. Yeah, that's the kind of environment we're in. It's the time of the vulture, not of the bull or bear.
Yeah.
Um,
Yeah, being able to, maintain what you have rather than so focused on how can you take advantage of, unless you're a
yeah.
specialized trader, you know how to get in, get out, but nobody can, do timing perfectly. So,
Well, even Jesse Livermore was wiped out several times, and he was the best stock operator of his time.
so yeah, odds are not in your favor to be able to get in, get out in time. So, just protect yourself. All right, people. As always, I want to thank the Super Seamster. I appreciate you, my friend. RTD and M64. Get that weight up. Watch Planet Lockdown. Planet Lockdown, isn't that the Alex Jones? Is that Alex Jones? I'm not sure. I've heard of it, but I haven't watched it, but I'll check that out. Well, anyway, everybody, we appreciate you for hanging out with us. Definitely keep your eyes on everything. Stay prayed up. Get your weight up. Get your calories up. Do everything you can to just basically, enjoy the moment, but also, don't sleep on opportunities you have in front of you. So, other than that, I guess everybody be blessed, be safe, and we will see you in February. Peace.
Peace.